Well, lots of stocks to discuss as we wake up this morning, so let's get straight to it. First on our list is Nykaa. Mangalam is here to tell us how the numbers look. Mangalam, not too bad?
Well, not too bad. You know, there are a few hits and a few misses, but all things considered, it is a decent set. Why do I say that? Well, because overall revenues of the company grew 33%. The gross merchandise value grew by about 37 odd percent. Yes, there was a decline of around 290 basis points on the gross margins. That was because of weakening product mix, but the company's limited the EBITDA margin decline to about 100 basis points, and that's largely by curtailing on fulfillment expenses and marketing expenses. The net profit optically down 71%, but remember, it is on account of the depreciation doubling, so most of it is non-cash. Beauty and personal care grew 26%, which is slower than what a large part of the street had estimated. But you know, that was made up by a strong growth in their fashion business, up 50%, and other new businesses, which grew at around 254% on a low base. The only fly in the ointment is that the spate of resignations continue, and this time around, the company secretary and compliance officer Rajendra Punde has resigned. The company has announced the appointment of Sujit Jain for this position. So let's see how that goes. But my sense is that we may see a mild tinge of green today.
Okay,
right.
mild.
Mangalam, thanks very much for that. 150, it's done well. I mean, like the other IT, the new age tech companies, Nykaa has come up quite a bit over the last 2 weeks or so. But Vahishta is standing by to talk about Zee Entertainment and what they reported. Vahishta, hi, morning.
Hi Prashant, good morning. Well, Zee, it's been another weak quarter for the company. In fact, the revenues have been flat due to elevated investment in content and marketing. The EBITDA margins have contracted by nearly 600 basis points on a year-on-year basis. Additionally, there were provisions which are totaling to 169 crores, which were made in this quarter, which led to a drag even in their profitability. The advertising revenues were down 16% on year-on-year basis, led by the free-to-air channel withdrawal of Zee Anmol and curtailed ad spends primarily by the largest FMCG sector. Though the positive was in the subscription revenues, which grew by 13% on year-on-year basis, ZEE5 revenues grew 33% on year-on-year basis, but the EBITDA losses have widened further and come in to 282 crores. Zee's network share has also contracted and come in at 16.2%, so it's been yet another weak quarter for Zee. But the silver lining here is that the merger with Sony is well in progress, and in fact the NCLT hearing is also scheduled today. So the merger is expected to be completed by the end of FY23, but what the street really wants to know that in the merged entity with Sony in the driver's seat, will Zee be able to witness a turnaround in FY24? That is what the street wants to know. Well, only time will tell you that. Back to you.
Okay, all right. Thanks a lot for that, Vaista. Well, I'm talking about two metal companies. One is SAIL. The numbers look quite good. On the top line, there was a small miss out there, but on the operational front, it looked better. So the EBITDA number was better than what we were working with, by closer around 200 crores. And the profit number as well did look better than what we were expecting. But on the couple of points on the EBITDA number, half of that was because the December sales number included closer to 90 crores towards rail price revision for the previous 2 years. That yet has to be approved, but they've already included that. So half of the EBITDA beat was because of that. The other factors that played out was sales volumes are higher, but a couple of expenditures is lower. Other expenses are lower, employee cost as well is lower. So that's why operating leverage should play out. And the profit number got a bit of a boost, closer to 300 crores, because the sale of a portion of land to the DFC. So that explains on SAIL. Well, SAIL should open up in the green. The problem is we're still waiting clarity on the debt and the capex outlook, which is always a big disappointment from them. But for the starters, green. Ratnamani Metals numbers look good actually. Net sales numbers up by close to 20%. The EBITDA number came in at around 200 crores odd. That's the best EBITDA number I've ever seen from the company, and the margins came in at its highest levels we've seen since March 2021. The margin trajectory should come up for you. Profit number as well did bounce up in trade, so green on that one. But Mangalam, coming back to you. Campus, how about those numbers?
Well, it was a soft quarter for Campus shoes, and yet another soft quarter. Where does the weakness start from? From the top line itself, 7.5%. Just a 7.5% growth in the company's top line on a favorable base. But the EBITDA was lower on account of lower gross margins, and as a result of which, the net profit was lower, and it was further lowered by higher depreciation as well. If you just take a look at the net profit, down around 11.7%, because the depreciation jumped from 13 odd crores to 19.5 odd crores. So the stock, while it has seen a massive correction from the top in the recent past on account of a lot of the brokerages finding some value at lower levels, there was a bit of a bounce. In fact, in Feb itself, it's up around 4.5%. From the lows, it's up 35%. So would see some profit taking on Campus today.
Okay, thanks a lot for that. Well, a couple of more numbers that came through. There was Castrol, GSPL and Linde India. Sonal is here to give us the lowdown. Sonal, over to you.
Good morning, Sonia. Let me start with Castrol. Well, it was a muted set, revenue growth of just 8%, but EBITDA declined by 6% for the company, leading to a margin compression of almost 300 basis points. Profit growth was also muted, came in higher by 2.5%. However, for the calendar year 2022, company has achieved the lower level of the EBITDA margin guidance of 23 to 25%. So 23% is the margin for the entire year. GSPL, another weak set led by lower volumes this time. So revenue declined 7%, EBITDA is down 8.5%, margins also lower at 67.1%, and profits were down 45%. That is also because the other income component was lower. Other income this time around was at 13 crores versus 104 crore rupees on a quarter-on-quarter basis. Linde India, decent set of numbers, revenue growth of just 2%. However, EBITDA was up 16% because of lower OPEX, and margins increased by 300 basis points, leading to a profit growth of 22%. So that stock should be in the green today.
Okay, all right. Thanks for that. So now we're going to Ekta. Then Ekta, you want to tell us about Global Health as well as IRB Infra, how those numbers?
Thanks for that. Well, yes, I expect both the stocks to be in the green today. Global Health is basically Medanta, revenue up around 19%, EBITDA up 18% year-on-year. Margins have been maintained at 23% and the profit growth has been 15% year-on-year. Q-on-Q as well, margins been maintained with the profit which was a decline of around 6%. Remember that these numbers are during a seasonally weak quarter, so the occupancy has been maintained sequentially at 59% versus 60% on a year-on-year basis. Average revenue per occupied bed is up 4.3% on a year-on-year basis. IRB Infra, net profit up 95% year-on-year, revenue up 18.5%, margins at 49%. Profit was aided by a strong growth in the share of joint ventures. Toll collections have been up 33% on a year-on-year basis. They've also received an appointed date from the UPEIDA for the Ganga Expressway project. So maybe a lot of things going for the stock today, and you could probably expect the stock to be in the green.
Okay, thanks a lot for that. Well, here's a quick recap of our top stocks with positive news flow. There's Nykaa, SAIL, Ratnamani Metals, Linde India, Global Health and IRB Infra. While stocks with negative news flow, Z Entertainment, very weak numbers, Campus Activewear, Castrol India and GSPL. But there's lots that's happening in the world of commodities as well. Brent crude is almost at $86 a barrel now. The market is weighing the Russian supply cuts amidst demand fears. Manisha Gupta is joining in to give us the latest there. Manisha, good morning.
Morning. Well, yes, we've seen strength come back in case of the crude oil prices, and this is because of the Russian crude oil, one. And two, the markets also are looking at the IEA drilling productivity report from the U.S. oil and gas, where the expectation is that you could be looking at a higher production for the month of March. Markets also are awaiting the OPEC monthly report and the U.S. inflation data that comes in today as well. So ahead of that, there's a bit of a choppiness into the markets there. But some profit taking is what we are seeing in some of these metal prices. Aluminum, for example, is trading at a 5-month lows. Zinc is trading at a 3-month lows as well. The strength, though, in copper continues, where we have seen inventories continue to decline. The Chinese demand is going to be the major factor here. Until now, the manufacturing activity from around the world has been on the weaker side in the month of Jan, but it is going to be the Feb numbers that the street is keeping an eye on. In the meanwhile, you are looking at strength continuing in energy, even natural gas, heating oil, gas prices have seen some strength in Asia.
All right, Manisha, thanks very much for that. Commodities in focus. Well, all of this also feeds into